Welcome to Tangential Soup, a weekly podcast discussing life in Australia, technology, food, fitness, and the like, hosted by myself, David Caddy, Melburnian, independent developer and tea enthusiast, as well as my good childhood friend, Alexander Carr, Sydney-sider, slave to the man, karate practitioner, and lover of adventure. This week we talk about visions for the future, the Google Home always listening, strawberries, and new phones from Apple and Razer. So you've got some follow-up for me, Alex.
I do, yeah. Sort of follow-up, sort of. I guess it kind of draws from what I was talking about last week.
The housing market.
What I was kind of saying about the housing market, yeah. And I think what I've mentioned before about the fact that housing is seen to be always a good investment. And I think most Australians certainly always see it as a good investment because they don't really have anything to contradict that. Housing prices have, for the most part, always gone up in Australia. And probably, I think, for the most part, will continue to over the long run. But certainly over the short term, I don't think that they will. And I was just looking at an article posted to abc.com.au titled House Prices is Buying an Apartment a Wise Investment for First Home Buyers by James Fettis. And basically what it's saying is house prices are at an all-time high, and is buying them a good idea. And he gives an example of a family, or a couple of sisters actually, who bought an apartment in Canberra.
Yes.
Which, for people who don't live in Australia, Canberra is, as far as Australian cities go,
very quiet.
Not very big, and also very quiet as well. So there aren't a lot of people that live there, and I wouldn't really say there's a large housing demand. But
it is the capital,
because
though.
In general there is a demand for house prices in Australia. It is the capital, yes, but nothing much seems to happen there beyond having our parliament sit there, I think.
Yeah.
And yeah, so these sisters bought an apartment off the plan, which is a very popular thing to do in Australia, especially for younger people, because you can just pay the deposit for the house up front. And then several years later, your house will be ready and you can organise a mortgage for it at that stage. Or at any point while the apartment is being built, you can actually sell it. All you will have paid for is the deposit, and then you can basically make any profit that you would have made through, I don't know, some financial arrangement where you take on the debt for the full house momentarily and then sell it on. So overall, if house prices are going up, it's a pretty attractive prospect. But what they're basically saying is that in Canberra, there isn't really the demand for housing that there is in Sydney and Melbourne, where we both live.
No, not at all.
They ended up buying their apartment off the plan for $436,000, and ended up having to sell it for about $406,000. So in the end, they lost $30,000 on it, which is quite a significant amount of money. And they also found that the reason they had to sell it was because they couldn't actually find tenants to cover the costs of the mortgage. And this just ties back into what I was saying last week, where house prices in Sydney are so high that you can't possibly have renters or boarders, or house prices across the cities in Australia rather are so high that you can't really, in most cases, have renters or boarders that will be paying money to you that will actually cover the cost of your mortgage. So you have to rely on capital growth to then cover that difference, and be happy that the capital growth that your property is making will cover that gap, and that you will still be able to make a profit out of it. And if house prices start to go down, and if interest rates start to go up, people have huge mortgages that they've got to pay large repayments on, and they have tenants that aren't going to be able to cover the cost of that mortgage, regardless of what they try to charge them. They'll have to then sell their houses, and if they're selling their houses for a loss, then they're going to lose money. So it seems to me that the main people that will suffer out of this, this downturn in the market will just be average investors who, can't actually hold on until the property prices go back up, and then have to sell out and make a loss on safe investment, I say in between quotation marks. Not that I'm saying that would be the case for everybody, but it's a danger, especially if you're buying an apartment, I think, because there are a lot of apartments around at the moment.
There is, yeah. And also in Brisbane, it's gone down a lot in terms of apartment prices over the last little while. Yeah, exactly. It's down 3% over the last year, or I think, no, 6% over the last year, they've said. Which that's quite a lot for like a $370,000 sort of dollar apartment.
Oh, even more than that, I'm sure. But yeah, you're right. As in, like, potentially people are paying more than that for apartments. So yeah, it's a large amount. I think as well, there isn't a huge amount of understanding of the risk that you take on.
Well, buying off the plans is pretty hard too, though, because by the time that it comes to completion, the market can be quite different to the price that you've agreed upon. So it's always a bit risky.
It is, absolutely.
And also in Canberra, like, I know this is just an example and it's certainly a trend across the nation, but there's no reason to invest in Canberra. Like, if you want to live there, fine, but it's not a good investment place. There's nothing else going on there apart from the politics, like you said.
Yeah, exactly. Yeah.
You need to be somewhere where there's industry or just generally popular.
Well, exactly, yeah. And I think that's why a lot of people seem to think Sydney's safe. But, I mean, again, you've still got to have the demand, and you've still got to have people that are willing to pay the amount of money that at the moment people think it's worth.
Sydney's still growing, though.
You've got to have people that can afford it as well, I think. But you're right, I think Sydney is still growing, but at a lesser rate than it was before, as far as I'm aware.
But given the population and the expanding infrastructure and all that's going in, like, it'll probably slow, like you say, but I don't think it's going to slip like it has in Canberra and definitely Brisbane.
Well, not on its own. I think if interest rates go up, it will.
Maybe. Although, of course, the problem then is in Melbourne and Sydney, to just get your foot in the door is incredibly difficult with the prices the way they are now. So even if you did think that they were a sound investment, it's very hard to get in.
Yeah, no, you're right about that. And maybe you're right. Maybe it won't end up going back. I don't think it'll go backwards a lot, but I do think it'll go backwards in the short to medium term, maybe.
It's got an interesting graph here, doesn't it? Which is proportion of unit resales at a loss, and it shows that Darwin, 51.6% of them have been sold at a loss in the March 2017 quarter. This is from RP data,
which is
ridiculous.
Pretty significant.
I mean, there's not a heck of a lot going on in Darwin either, so I guess that explains it. But Perth surprises me at 35.9%.
I think, yeah. Well, it just goes to show how overbuilt units were.
Yes,
or have been.
Well,
still 11% for Melbourne is still pretty high.
Yeah, it's pretty high. Sydney's basically nothing though, which is interesting. 1.8. Although I suppose you actually want that to be negative, don't you?
Well, yeah, you do, exactly. And I think that this is quite a significant bit of information. I remember, I think I mentioned this last week, going around and seeing real estate agents talk about how your property price will never go down. And I mean, obviously they don't have to back that statement up with any fact, but yeah, it's just funny how these people can go around and kind of tell these lies, even though they're the ones who are directly selling the house.
Yeah, I guess that's true. I don't know, I still don't think it's a bad investment, but clearly you're not keen on it, at least at the moment.
Look, I think probably the Sydney CBD is a pretty sound investment, regardless of what you're paying, because I'd say it's probably always going to go up for the most part. But that's not really where all the units are. All the units are in the surrounding suburbs, and you'll probably find that all these areas have a lot of units, and even if there are people there to buy them, their house prices will have to hit a point where people just can't afford to buy them. And then once you take out the average person who's trying to buy a house, because interest rates are high and everything like that, then who's there to actually drive up the demand, the buying demand? Who's there to kind of push the prices up?
That's true.
like investors probably aren't going to try and outbid each other because, I mean, in the end, they're there for capital growth. But if they don't see the potential for capital growth, they're not going to jump into the housing market. So it's only when you've got these kind of average families investing heavily in the property market that it's going to keep going up. Otherwise, it's probably not.
I think, though, in terms of investing in property, especially around like the Sydney suburbs and the Melbourne suburbs, that it sort of depends over what time scale you're looking. Because I think you might be right that we might be coming towards either a bit of a plateau or a downturn in terms of I mean, we're already in a downturn in the property market. But if you look over time, like our population is never going to go down. Sydney and Melbourne are always going to be more popular than anywhere else, just because it has all the infrastructure and things are happening, and because it's already densely populated as is.
Yeah.
That I think probably if you take the investment over, say, 20 years, 30 years, there's no way you're going to lose money over that time, I don't think.
No, I think you're completely right in that, actually. But it's not about... It's about the fact that the house prices are so high now and so many people have the mortgages that they just can't afford to finance, so they have to sell out of them early. So I suppose it's just about picking the right investment for you. Because I agree with you. I think that in the long run, it's always going to go up. Unless you have something terrible built next to you that makes your house just completely undesirable, then, it'll always be an investment that goes up. But it's just being able to keep the investment over that time and wait to be able to actually see the growth.
Yeah. Yeah, it's probably not the best time to buy right now.
No, I don't think it's been a good time to buy for a while, actually. Although, having said that, I suppose if you bought in 2012, you still probably would have made about 30% on your property, which is a pretty good time to buy, actually.
Yeah, probably the last 2-3 years, maybe even 4, probably hasn't been the best time. But before then, especially like the 15 years before that or whatever, it's been a steady increase.
Ridiculous.
Yeah.
Yeah.
So I guess it did have to slow down at some point.
Yeah. No, you're right.
How's your share market game going?
Actually pretty good. I'm up to 56,500.
Is it still on the back of the lithium miners?
I'm still making a bit of money out of them. Not as much as I was. I've kind of stopped trading in them a bit. Well, no, it's not that I've stopped trading in them, but they've stopped being quite as volatile, and I think the Galaxy's kind of hit a bit of its peak. And what am I trading in at the moment? Actually, I think I showed you last week St. Barbara, which I still think is a decent buy, which I've kind of kept. So I've stayed with that, which is a gold miner. And I think really, generally speaking, for short-term buys and sells, the mining sector seems to be generally the best. And I have one tech stock, which is called Technology One, I think.
Okay.
And I bought them at a low, and then they got upgraded by an investment research firm to a buy, which usually drives their share price up a bit. So, yeah, generally speaking, going okay. I haven't had a loss in a day yet for probably about a week and a bit. And the ASX, I think, has hit almost its high. I think it's hit its highest point this year, which is something.
I still don't really know what that means. I assume it's good, right? Because all the businesses, or like the majority of the shares being traded, are doing as well as they have been for a while. Because it's sort of like the overall value, is it?
Yeah, I really should look this up. I'm pretty sure that so it's points. The ASX works on points, and I think the points are just related to the dollars sitting in the in the index. And basically, what I trade in this game is the ASX 200, which is the top 200 companies in the ASX, which is the Australian Stock Exchange, or Securities Exchange, I think. But yeah, I think the points just relate to the amount of money that's sitting in it. The reason it hasn't gone up more, so I was actually reading an article, which I don't remember where it came from, but it was saying that the European Stock Exchange has gone up something like 30%. The American one has gone up about 15%, and the Australian one, since the start of the year, has only gone up about 2.5%. So, our stock exchange isn't actually doing that well compared to the broader market, and it's because our banks have been quite heavily regulated, as I was mentioning previously, with their cutting of the interest-only loans and stuff like that. And it's kind of hurt how much money is sitting in the market, because they're not making as much money, and their share price isn't worth as much.
I mean, that makes sense from our point of view, I suppose. But it surprised me that like the European banks and that weren't also doing similar things. It seems like more of a trend, but maybe it's just because it's more of a trend here that I thought that.
Well, I was actually reading an article, and I don't know, I tend to find that these articles get a bit, what's the word? They get a bit conspiracy theory-ish, esque, I don't know, something like that. In the sense that they, when you start to talk about like the GFC and start people trying to predict the GFC, and I'm sure this was the case for people who did actually successfully predict the GFC back in 2008, it's hard to know when the market's actually going to go down. But what this article is basically saying is we're in very similar conditions now to the conditions we were directly before the GFC, in the sense that we've had a huge boom over the last few years, but there's not really that much stable kind of stuff sitting underneath it to support it. And there's been a lot of government stimulus from governments really all around the world. I mean, especially in the US, which is a big driver of the global economy, but also in Europe, and Germany has been basically paying money into a lot of the European markets to kind of stabilize those. And it's all basically been driven off government stimulus. And people see it as free money, and people see the markets going well, so they invest in it heavily. But yeah, I don't know. I don't know if it's true or not. But they say that we haven't really built these gains on very stable foundations, and they could all come tumbling down when we find that whatever it is that people have been investing in aren't actually very good investments, and then everyone tries to draw out at the same time, and it all crashes.
So do you know what you need to do to actually get started trading shares? Do you just have to like pick a broker and then...
It's funny you say that. Yeah, so basically, there are a couple of types of brokers you can go with. You can just go with a basic platform, which would be something like there's NabTrade, or there's this thing called IG, I think that's what they're called. And they're just basically a system. So you can see the market, you just type in the code and say, I want to buy this. I think they charge you $20 per transaction. You set your price that you want to buy at, or you can just say, I just want to buy it whatever the market's offering it at. And then you set that. And then I think the way I can do it in the game is, I think how it works usually in most platforms that exist nowadays is you can set a sell price. So you can say, okay, so I bought this at $4.50. Once it gets to $5, I'm selling it. I've made 10%. Is that right? About 10%. That's good enough for me, so I'm selling. So I think you can just set an automatic sell price, and then basically what people do is your system is then putting that offer onto the ASX, and then there are a whole list of offers sitting in the ASX, and then you're just waiting for someone to pick up your offer. So whether it's you're saying, I want to buy at this price, your offer's sitting there, someone's going to pick it up, say, okay, here are my shares, or here's 500 of your 3,000 shares that you wanted to buy. That's what I've got. That's what I'm selling at that price. Here it is. Or someone might say, here's all your 3,000. And then, if you've only got 500, you'll just wait for someone else to come around and fill the rest of your order. So that's how it works in the game. And I'm pretty sure that's how it works in all the share trading platforms that exist. The other system is a broker advice system. So basically, you actually work through a broker, and they give you advice on your share purchases. So you might say, I'm looking for some advice on this company. Should I get it? It looks all right. And they might say, well, look, they had a bad earnings season last year. They're probably not going to perform very well. I wouldn't recommend getting them.
Okay. So do you know there's too much difference between the stock trading platforms, or they're pretty much much of a muchness?
I think they're much of a muchness, honestly. Basically, I think it costs about $20 to $25 per trade if you're just using your own platform. Usually the broker advice systems might be $80 or something. But
Okay.
Basically, they're all the same.
So that's how, regardless of how much you're buying or selling.
Yes. I'm pretty sure it is. Yeah, I don't think they, because it doesn't actually really matter to the platform itself how much you're buying or selling, as far as I'm aware. I think maybe if you're a big seller or a big, you've got a kind of big turnaround, you can probably get your trades for free, but I don't know exactly how it works, to be honest.
Well, yeah, if you worked out some sort of special deal, but generally
Yeah, I don't
speaking, it's
think,
about $20-25 per transaction.
I think so, yeah. I don't think they do anything on percentage basis
Okay,
as far as
that's
I know.
interesting. So you're going to get stuck into the real stuff? Now you're getting successful?
Actually, it's funny you mentioned that. That was one of my weekend things to do, and I didn't get around to it. But yeah, I'm going to find a platform. I think
Weekend's not over yet.
Well, that's true. I think I'm going to do it on IG. I might just look around a bit and see what the deal is. But I mean, as far as I'm aware, they're all brokers. They're all electronic brokers, really, for the most part. I don't think with the bigger kind of platforms you talk to real people. So unless you want to, at least. So yeah.
Yeah, it's all just automated. Cool.
Yeah, basically.
So what would be your first buy?
Well, look, honestly, David, good question. I like the way the ETFs go, which are electronic traded funds. So they're basically, you can get several types, but there are some investment funds that are actually themselves listed on the ASX. So how that works is you might start with a pool of $100 million and say, I'm going to invest this in, Australian infrastructure and emerging markets. So you're kind of specialized investments. And then what you also do is you offer shares on the ASX to your own company. And that's basically how you invest in this particular fund. So I don't know if I'm explaining it very well, but basically it's a listed investment company.
Yeah, could you try that again? There's a fund that you can invest in that invests in like a collection of other things that sort of specializes in a range of investments in a certain sector or something. Is that what you're saying?
Well, it's not necessarily in a certain sector. The fund could invest in anything.
Okay.
So the investments of the fund are irrelevant, but the setup of the fund is that instead of you putting money into the fund and giving it to them to invest, you buy shares in the fund. And then the share price is linked to how the fund performs.
Oh, okay. And so they're investing just to make their price more valuable.
Exactly. So they're just making profit for themselves, and that's all they're doing. But you as a shareholder will benefit if they're making good profit.
So are they on the ASX as well?
Yeah. So that's called an ETF, Exchange Traded Fund.
That's interesting. So how many of those are going around? A lot?
Oh, so many. They're really common. One big thing that's come out recently is an American ETF that's entirely automated. So there's actually no human kind of investment in that ETF. And actually, I don't know if it's an ETF. No, sorry, it's not actually an ETF. But basically, there are a lot of them, and they always perform really well. Or at least generally speaking, they perform really well. And they usually pay pretty good dividends as well. So a lot of the profit that the company makes goes to shareholders.
Okay.
So yeah, I'm just looking up some best performing. So often these ETFs will they'll invest in specific markets, and generally speaking, how well it's done will just depend on how well the market's done. So an ETF might be invested in infrastructure, and I mean obviously Australian infrastructure has been mostly profitable because a lot of infrastructure comes with land, and generally speaking, land has been fairly profitable to hold. So I think usually infrastructure funds have done fairly well in Australia. Australian property funds do very well for obvious reasons until recently.
That's interesting. I hadn't really heard about those before. Or else I didn't realize that they were also on the ASX as well.
Well, they are, and honestly, it's just a ridiculous way to make money, I guess.
Yeah.
But, yeah.
Well, I guess that means that you can have sort of a balanced portfolio while only holding shares in one company, as it were.
Yeah, so there are a lot of different ways to do that, though. The most common way isn't investing in an ETF. It's just investing in a managed fund. So basically, what a managed fund is you just give your money to someone else and say, please invest it, and you can say, please invest it in your Australian property fund. So they're doing all the investment in Australian property, and they're charging you a fee for it. But you then have your money directly in Australian property. So, and then you're linked to that performance. So that's usually the way people achieve diversification that don't want to manage their own money. And the same thing's true in your superannuation, though.
Yeah.
Like if you looked at your superannuation, it's diversified across a whole range of things. If you haven't looked at your super, you're probably just in your standard fund, My Super option, which honestly performed very well. Probably, I think, an average of about 10% per year.
Okay.
Which is ridiculously good. Yeah. But superannuation is a huge chunk of the Australian financial market. So
it is big
they
business.
have a lot of leverage. It's huge business, honestly. And it's all of people's retirement savings are invested in the market. So another thing that happened in America and that may happen in Australia is if you do have a market crash, then potentially your retirement savings are down for the next few years. And I mean, in America, people lost all their retirement savings because they were invested in all those what were they, the equity debt? No, not equity, the property debt investments, and they all kind of crashed. But I don't think the same thing would necessarily happen in Australia, but it's bad that if you're around retirement age and the market crashes, then you're potentially losing a large chunk of your retirement savings if you need to withdraw it at that point for whatever reason. Which is not good, but I guess just the risk that a lot of people inadvertently take because they don't realize what exactly the situation is, but hopefully most of the people realize.
Well, you have to put money into super. So what else can you do?
Well, you do, but I mean, you don't have to have your money exposed to the financial market, or you can have it exposed to the market in a way that you think is safer. Like pretty much all the big super funds now have the option to directly invest in the share market if you want, or you can pull your money out, put it in an SMSF, and invest in property or whatever you want, really. Not that I would recommend that that's a good way to go for the vast majority of people. I think self-managed super funds are very common, but they're very commonly used to buy things like property. And again, people don't realize that property isn't necessarily a foolproof investment. So it could potentially go badly.
So you can take your super and then directly put that into the shares that you want to invest in. Is that what you're saying?
Yes, you can. So, do you know who your superannuation fund is?
I think it's just Australian Super.
Australian Super. Yeah, well, I've got Australian Super. So what you do is you can just go edit your investment options. And then I think you've got the option to invest in the ASX 500, which are the top 500 companies in Australia. You've got to leave, I think, 10% of your balance in one of their pre-made options, but the rest you can put into one of those companies or a combination of those companies if you want. Australian Super is good. They don't charge you for investment switches, but you do have to. I'm pretty sure you'd have to pay if you wanted to invest in the stock market directly. I don't know how much it is though.
Okay, well, you could do that, Alex.
I don't know. I think the thing about investing directly in the share market like that with your kind of own money is, I think you've really got to realize that you shouldn't be investing money that you can't really afford to lose. And while I could afford to lose my super and it wouldn't be the end of the world, I don't really want to lose my super.
Did you hear about the Google Home always listening?
No, I didn't actually, to be honest.
Okay, so this is kind of a beat-up story in one sense, but Google the other day announced some new Google Home devices. So I'm sure you're familiar with the original air freshener type looking one, the device that sits in your
Yes.
home, and you say the magic words to it, and then it activates, and you can ask it all sorts of things. So the other day they announced 2 new products in the Google Home family. One, the Google Home Max, which is a $450 speaker. I mean, it's the same thing as a Google Home, but it's got like a proper audiophile grade speaker in it as well for playing music. And then also the Google Home Mini, which is a $49 sort of little puck style thing, which is a cheaper option to the original one.
Right, okay.
They gave everyone that was at the announcement review units, obviously. And this one reviewer from, I think, Android Central found that he put it in his bathroom, this mini product, and he was sort of wondering why it was behaving a bit funny. And then he went to look at the history because, as with all these devices, you can go and look. There's this particular web address where you can go and look at all the things that you've asked your Google Home.
Yeah.
And he realized that it was just sending up everything that he was saying in the bathroom or anyone was saying in the bathroom, like without saying the key phrase. Because typically how it works is you say the key phrase, then it will start listening properly, and then it will send back anything after you've said after the key phrase until there's a pause, and then it will answer that query, and then it's only listening for that key phrase in between times.
Right, okay.
But in this case, it was sending up every piece of audio that came from that room.
Oh, really?
Yes. And obviously this is pretty terrible from a PR perspective because Google already seems quite creepy, I guess, to a lot of people. But then this is sort of going a step beyond that. And they've said it's a bug, and they've actually gone to this guy's place and they've retrieved the unit in question. And what they're saying is that there's sort of a capacitive button on this product where you can sort of just press and hold it and then ask queries without saying the keyword.
Yeah.
And it's also fabric covered, sort of, to make it a bit more aesthetically pleasing, I suppose. And they're theorizing because it was in the bathroom and it's a slightly wet or humid environment that somehow the covering was always activating the capacitive button, which is sort of underneath the cloth. And so it was sort of just constantly listening, and that was the reason why.
Right, okay.
So I think what they might do, at least in the short term, is like disable that whole feature. But it may not ever come back on the Mini if they can't sort it out, because that seems like a hardware problem as much as anything, which is a bit of a blow for them. But hopefully we don't get continued stories of this, and it was just an honest mistake.
Yeah. Look, I mean, to be honest, I don't really know what they'd be doing with that information anyway. And I think that there's a lot of paranoia around constantly being monitored by your technology, which, well, obviously it's justified and is quite a concerning thing to a lot of people, myself included. I'm sure that Google wouldn't intentionally do this because really their whole, or a lot of their business relies on being able to provide people with privacy. And
you think so? Google in particular? I mean, they're tracking you for basically everything so they can serve ads to you. In terms of privacy, they're pretty good at not like on-selling your data to other people because that they make a lot of money from that. So they do protect it vigorously, but it's not like they don't have an incredible amount of your data. So in saying that, just generally capturing everything that you've said in your home is not valuable to them, I would potentially disagree with that. But they definitely couldn't really just start doing it, right? Because there'd be such an uproar. So I think it was an honest mistake, although from a purely conspiratorial point of view, maybe just for the reviewers, they wanted to hear what they really thought of the product. Potentially, but no, I think it was a mistake. I think it was a hardware failure as much as anything, and that it will be corrected. You have no interest in these sort of devices, do you?
Honestly, not really. I mean, I like the idea.
I do like the idea too, in just being able to ask for it to play music or whatever.
Yeah. But I mean, really, like, what's it going to add to my life that I need to justify the amount of money that I'm going to spend on it? And
Well, for like 79 Australian dollars, though, you could, when you get up in the morning, hey Google, give me the latest stock market information as you're walking out the door.
no, look, that would be handy in a way, I suppose, but it's nothing that I can't do myself, I think.
No, that's true.
For me, not my thing. Would you get one?
I don't know. Like, I kind of want one, like I said, for purely the music standpoint. Like, maybe the Google Max is like an appealing product, and also maybe even Apple's one. Although then I would have to switch music services. But then, like, everything else, and to have it sort of constantly listening, I mean, maybe I'm just paranoid because it isn't meant to do anything like this particular example. If it's only listening for the keyword, I think that's fine. But I think I'd be almost inclined to maybe more go for the Apple one because they're also not an advertising company. Whereas, your other two options are Google and Amazon. And although Amazon isn't an advertising company per se, they invest a huge amount of resources in selling people things from their own website. So it's basically the same.
Yeah, right, okay.
But again, that's kind of paranoid.
I have to admit, this isn't really anything I've ever thought of beyond, having that information available to me.
What about on your phone? Do you have it so you can just activate it, sort of it's always listening? I don't know whether the is it the G4 has it, but it probably does, where you can just turn it on and then say the keyword to it, or at least when it's like charging or whatever.
I don't know. It's certainly never a feature that I've explored, but possibly exists. I don't know. I think, just not something I've ever wanted in my life. For my life.
Well, even if you take away the always listening aspect, do you ever just talk to your phone to ask it things? The whole Google Assistant?
I don't know. Google Assistant's creeped me out a bit, as I mentioned in the past. Just not from any privacy concern standpoint, just from the fact that they keep trying to get me to use it, and I don't want to use it. So
it's like antivirus software that you haven't subscribed to.
Yeah, exactly. Like, I'm sure it may benefit my life in some way. Not that I think antivirus software that you have to pay for would, but like, I'm sure it would help. But
Meh.
Don't have time for that.
Strawberries, Alex.
Yes, I planted some strawberries. Finally.
Haven't you been talking about this? No, didn't we talk about this on one of the very first episodes or the second episode?
I think it was basically It was very early on, and
you were debating about getting pots or not, or which ones you were going to get.
Yep. We can include a picture of my new strawberries in the show notes.
Absolutely.
But, got a couple of nice-ish pots, and I have some freshly planted strawberries. I hope they go well. I don't really know what I'm doing, but I just chucked them in some soil and put some water on them. It's basically all plants need, right? Soil and water.
Pretty much. Strawberries are pretty resilient, as long as they don't get any frost, so. Which you probably don't even get there at all.
I don't think I've ever seen frost in Sydney, but I think as long as you can avoid it in the winter months, which, I mean, obviously we will here.
Yes.
It'll be fine. So I think all is good. Just got to get those roots of those strawberry plants strong. So what I've done is I've actually planted them quite low in the pot. So I didn't want to give them too much pot to begin with. And it's kind of what do you call a shape where it's slim at the bottom but wide at the top?
Like an inverted trapeze?
I guess so, yeah.
I know that's not what you're looking for.
No, it wasn't. It's a round pot.
A taper?
Yeah, it tapers off at the bottom, I guess.
Yeah.
So tapers in at the bottom, rather.
Yeah.
So yeah, I'm giving them less pot to begin with so that they can kind of find their roots. And then I'll plant them a bit higher in the pot later on, I suppose. I don't really know what I'm doing, but that's my general aim. And then I should have strawberries for winter, I guess. Strawberries happen in winter, don't they?
I would have no idea.
You should probably know this, being a new strawberry father.
Thanks again for joining me, Alex.
Pleasure as always, David.
You can follow and get in touch with us on Twitter at Tangential Soup, and you can find this week's show notes with more information about today's topics at tsp.fm/26. If you enjoyed today's episode, please consider sharing it with anyone you think might also, and we'll talk to you again next week. Bye.
Ciao.
So, Alex, I saw you sent me an article to Razer's new phone, of all companies.
Yes. Now, the reason I did this, David, wasn't necessarily that I have...
A burning desire to get this into your hands?
Well, no, I definitely don't have that. It was more just to kind of get your opinion on the idea of a gaming phone and what might be in this phone that isn't actually in other phones. Because from what they say, it's got quite a powerful processor.
Yep.
And obviously a large screen, which is really on most phones anyway, so it's not a particularly special feature. And I think a special speaker on it as well. But I was just wondering if it would actually equate to it being a good product in any way, or if it's just a really stupid way of kind of making a phone and a gaming product, in inverted commas.
Well, from what I understand, there isn't actually that much special about this particular phone. Like you say, most phones have a big screen, good speakers on a lot of the high-end ones, because this is priced as a high-end phone. Probably the feature that stood out to me most is the fact that it refreshes at 120 hertz, the display.
Yes.
Which, that is the first phone to do it. Apple released... earlier this year, they released new iPad Pros that do this. So that was probably the first very mobile device that shipped with 120 hertz to refresh rate on the display. But this in a phone is pretty wild. Now, is that going to make a huge deal of difference? I don't think so. All the pro gamers want as high a refresh rate as possible because they can do play the Twitch games and they can have that split-second advantage over the competition if they can get that refresh rate in. But what type of games are you going to be playing on a phone that's going to make that kind of difference?
That was kind of my thought as well. Like, what are you going to be doing on your phone that would, you would need this particular technology? Because my first thought was like shooting games or something similar, like a strategy game. But again, it's not really practical to play those kind of things on a phone.
No, because you've only got the screen input. So you've only got your fleshy fingers pushing against the glass trying to do things. It's not very precise at the best of times. I feel like this phone is probably the best gaming experience you can get on mobile if you sort of take out the Android versus iOS argument, because there are probably a few more better games on iOS that are just exclusive to iOS. But if you take that out of it, this probably is the best gaming phone. But what does that really mean? Because gaming on the phone is casual, really, by nature. If you look at all the most popular games, you've got Clash of Clans and Angry Birds and Candy Crush. I know those last two are fairly old now, but they're still very popular. And Mario Run and that, and Pokemon Go. They don't require 120 hertz refresh rate. They don't require the fastest silicon you can possibly get. It's nice and it helps them run smooth, but really not going to make a huge difference.
So just a gimmicky phone in the end.
Possibly. It does look like a very nice phone though. The build quality is very good. I don't know if you've seen any of Razer's, like the Razer Blade, the ultra portable gaming laptops.
I haven't seen them in person. I've certainly never used them, but I do know that they have a string of gaming laptops that they market quite heavily.
They are very well built, lovely build quality, great materials, really nice aluminum, sort of a matte finish, and this is using all that technology, so it would be a great phone, just as a phone. But if you're buying it for gaming, I think you've probably got your priorities a little bit wrong.
Okay, well, yeah. And I mean, as I said, I was just really wanting to get your opinion on it because how do you think, in terms of phone, though, that it would stack up to something like an iPhone? Because it's priced at about the same point, isn't it?
Well, it's probably cheaper than the iPhone 10, which I may or may not have just bought, but it is still a very expensive phone. And it seems like it has all the checkpoints, right? It's got the highest end sort of processor you can have for an Android phone. It's got a great screen, great resolution, fast refresh rate, great build quality. It does have very big bezels on the top and bottom, which is rare in 2017. All the phones are going with a really high screen to body ratio.
Mm-hmm.
But Razer have said specifically this is a choice on their part. Not that they couldn't have done that, but they feel like for gaming particularly, you want something to hold on to.
Which makes sense.
Which probably does make sense, but it probably means it's a bit bigger in terms of its footprint than a lot of other phones. It is a 5.7-inch screen, so it's not a small phone. So if you've got big
No.
hands, then it's probably fine. I don't know, like it stacks up perfectly well, I would say. But you're buying from a vendor that this is their first phone, I suppose. I don't think I would really recommend most people get this. I would probably say go get the Galaxy S8 as like my default Android option, or the Google Pixel 2 probably, because it has the best camera of probably any smartphone.
I think that most people... So basically the Pixel was designed by Google to compete with the iPhone, right? That's where it's kind of aimed in the market.
Kinda. I mean, I don't think anyone's 100% sure on Google's real motivation behind the Pixel, because originally Google had their line of Nexus phones, which was somewhat similar because they designed the phone. It was always built by another manufacturer, but so are the Pixels, really. Google aren't really building it themselves yet, but they are designing more and more of the actual hardware. But anyway, they had the Nexus line, and that was sort of about, I think, getting stock Android onto good, relatively low-cost devices. I know you had the Nexus 5X for a while.
Did? And it works very well.
It was, and that had crept up in price. It wasn't sort of the lower end that the previous Nexuses had been, but it was a good mid-range phone. Very good mid-range phone. But now they're going ultra premium. And so I think you're probably right in that they want to compete with the iPhone. But then you would say that high-end Galaxy phones are doing that and have always done that. But I think they just want more control. Like they want to get a really nice high-end phone out into the market that doesn't have Samsung's junk all over it, essentially, I think. That they can deliver their software right to the customer without anyone getting in the way.
That's what I was thinking, because I mean the Samsung phones are still Samsung phones, though, aren't they? So, like, Google aren't still getting 100% of that pie.
Yes. Well, they're getting very little of that pie in terms of profit in that, because
yeah, exactly.
Android they can get for not too much money, and they like skin the heck out of it. I mean, the skins from Samsung have gotten a lot better over time, a lot less offensive now than they used to be. But for example, Samsung ships their phone with Bixby, which is essentially their equivalent of Siri and Google Now. You can still get to Google Now, but on their phones they have a dedicated button for their thing. So, and there was a lot of cases with that. They ship their own mail application instead of Gmail. Sure, you can get Gmail, but if Samsung really wanted to, they could kind of cut Google out entirely. I think their customers would probably scream blue murder, so it's probably not going to happen.
Yeah.
But Google is probably worried about that enough that they want to have a nice little corner of the market that, worst comes to worst, that they can really push.
Well, yeah, I mean, ideally, I think they wouldn't want to have Samsung in the picture at all, right? That would be my understanding.
Probably. I don't know. I wonder if that is their ultimate aim, because obviously right now the Pixel phones, while selling in big quantities, they're nowhere near the Galaxy phones and the iPhones. Like, they're
Yeah.
hundreds of millions of devices, whereas the Google Pixel is sort of on the lower end of the millions. Still in the millions, which is good. But if they are aiming to get there, they'll need to step up their game a lot. For example, in Australia, they had all this advertising around the Pixel, which is good. Like, they were pushing it.
Yeah.
But you couldn't pre-order it. They didn't even say exactly when you were be able to order it or buy it or which stores were going to stock it. Like, that's all pretty... They need to streamline that whole process if they're going to get real serious about it.
Yeah, right, okay. Because you're right about that. I remember seeing it advertised at JB, but I didn't really see it advertised anywhere else except for on some street signs, and it just said Google Pixel.
Yeah. So they were getting the brand awareness out there. But if you got really excited about it, like, yes, that's what I want, you could go to their website and you could see pictures of it, but you couldn't say, take my money and get me that phone as quickly as possible. And why wouldn't they have that? It doesn't make sense. They were launching in Australia. It was one of the launch countries.
Oh, really?
Yeah. But they had that. They had that in the States, and they only launched in 5 countries, which is a really small number compared to Samsung and Apple. But it's not bad. But the support around the sales is something they need to get better at. Although they have this year done better that now that they have got the ordering on their website open, even when they're out of stock, you can still order the phone. It used to be, up until even, I think, towards the end of last year, that if they were out of stock, they just wouldn't take orders anymore until they got more stock in.
That's very interesting.
Yes. Which is like, yeah, you might have done that e-commerce probably 10 years ago, but we've moved on since then. And if coming from Google, which is, web is their thing, it was kind of mind-boggling in a sense.
Well, it is, yeah. But I mean, obviously Google is such a big company, you don't really know what's kind of going on in the background.
No.
They could have just had 3 interns looking at that particular project.
Well, that's what it kind of makes you feel like, right? And then you go, okay, well, that's fine. But then they're not really that serious about the whole program.
Yeah, exactly.
So they are getting more serious, but I wonder how serious they really are.
Well, you'd assume they'd have to be pretty serious. Because, I mean, just to go this far would have been a huge financial investment.
That's true.
And perhaps all they were doing now was just testing the market. Because I seem to remember you saying quite a while ago now that Google have a lot of huge projects, some of which they drop, obviously for huge financial expense, but a decision that ends up being better for them in the long run anyway, because they don't drop money into a project that isn't going to make any money for them.
That's true. Did you hear that Google bought HTC?
I did not, no.
Do you know HTC?
I know HTC, yeah.
So
I don't know what they do specifically, though, technology things.
They're mostly a smartphone designer, manufacturer, seller. That's mostly what they do. And they're quite good at it in terms of the design. Their cameras have always been a bit lackluster, but as a pure object, they've always been quite nice. But they have always struggled in the market to gain a decent market share. So in September, Google announced that they were buying HTC.
Mm-hmm.
So they're going to bring a lot of people on board with a lot of experience in the supply chain and smartphone design aspects. So they probably are getting more and more serious because although they've clearly got a lot of talent in-house already to build the Pixel 1 and design the Pixel 2, but this will certainly boost their stocks. It is interesting, though, that they bought Motorola a few years back and then sold them. So I feel like they were dabbling with the idea back then.
Yeah.
And then, for whatever reason, lost interest in it, and now it's sort of come back in a big way. I wonder if they had stuck with that original thought where they would be today.
It's a very good point. I'm sure that with a company as big as Google, though, they have a lot of people looking at each one of the kind of business ideas that they've undertaken. And they're probably constantly being reviewed. And it probably just turned out that maybe that wasn't the perfect time for them to tap into that particular market.
Yeah.
Or whatever reason. And now they've just decided to do this again.
Although back then it seemed like there didn't require as much justification at Google to do things. Now with the restructuring that Alphabet's the parent company and then Google's underneath that, it seems like projects really need a decent justification and business case before they go forward.
Which is a fair thing, I suppose, for a large company like Google.
So yeah, they bought HTC for $1.1 billion.
Quite a bit of money, really, isn't it?
Yeah, but small chunk of change for Google, I suppose.
Yeah, that's true.
Are you curious at all about the iPhone X, iPhone 10, Alex?
Yeah, absolutely.
So I did cave and go to work, via a shopping centre to work early yesterday and picked one up. Despite the huge queues and lines that were forming around the country, I only had to wait about an hour, so it wasn't too bad. A lot of people had stayed overnight. A lot of people got there at like 5 a.m. Before the opening at 8 a.m. They did eventually sell out throughout the day, but people were still getting them past lunchtime. So there was a lot more stock than people initially thought for this very nice but incredibly expensive phone.
Would you say it's worth the price?
Look, I would say for most people, no. Like, if you use your phone how most people use their phone, I would say it's too expensive. Like, even probably a regular iPhone is too expensive. With how nice, fairly mid-range Android phones are these days, unless you're, like, semi-serious about photography with your phone, because the cameras do differ a lot between the mid-range and the high-end. But apart from that, I would say go get a nice mid-range Android smartphone. You'll be happy, and if it breaks, you won't care. Whereas this thing, starting at like $1,500 Australian money, is a lot for an outright phone. It is very, very nice. Like, I think it's worth it in terms of the hardware, but in terms of what people would do with it, I don't think it's justifiable, really. I justified it to myself because it has a really strange new screen shape, and as I make smartphone apps as a fairly decent, healthy side business, I thought it probably prudent to get first-hand experience with it. But really, if I didn't have that excuse, I wouldn't have touched it.